Hey guys, so in this video, I have the most amazing news for you guys whenever it comes to SoFi Q2 earnings. Whenever they were originally posted just a couple weeks ago, we did not actually have the 10Q that actually came out, which is the big financial document, over 220 pages filled with just solid information for us to actually be able to judge our investment in SoFi Technologies. Now, whenever we did the original video, we didn't have that information. Now we finally do, and I've plugged it into my spreadsheet so then we can get a long-term view of how this company has been performing overall. So that's what this video is going to be about. We can see how the company has been performing over the last couple of years, but also look at what this most recent quarter has done and how we can actually sort of judge our investments based on these new numbers. I'm also going to show off some top secret product reveals that SoFi wants to get into, but that's going to be at the end of the video, so make sure you guys stick around for that as well. But without further ado, let's actually jump in and look at these numbers. But I want to start here at the top, okay? And this is where we actually get to see the net revenues versus the net losses. And there actually was 1/4 of net income, but that was all the way back in 2020. But also what's really interesting is the net difference between these two numbers, and we've been seeing that in the last 3 quarters, as we sort of saw 61% into 66%, and now actually reaching 73%. The goal is 100% and above, because that's actually when we hit profitability versus the revenue that we're actually starting to make. This is all happening while net revenues are continuing to climb, and that makes it even harder because it makes it that much harder to actually break even on that number because we're trying to, continuously scale. But that just goes to show you how well we're actually doing, and it's probably due to having a bank charter. But next, I wanted to talk about their lending department because it's by far our biggest segment in the company, making up over 75% of our net revenue. And that really consists of 3 areas. You have student loans, home loans, and personal loans. But because, home loans have been taking a hit because of the macro environment that we're in, and student loans obviously are still paused, so we're not really seeing any benefits from that. I do want to focus on personal loans, which we've been pushing a lot of efforts onto, which is very, very exciting. What we can see here on average FICO scores is this is the actual credit score that people have for our business across every single quarter, and that is decreasing. I know that graph is quite small, and you guys are, what you've been saying from the comments, are visual learners, so I want to actually blow those up for you guys eventually, but I also wanted to show off interest earned as well. So what you can see here is how the interest rate has just absolutely been skyrocketing, and that's just due to the actual macro environment that we're in, which is also quite exciting as well. Next up, we have interest income recognized, and this is the actual amount of interest that we've made just from holding the loans and people paying the interest on their payments, right? And so this has been exploding in the last 2 quarters. This is probably due to us actually having the bank charter, right? Because we can hold, our own personal loans for over twice the amount that we could before. Obviously, we're holding onto those loans longer, and that's going to just obviously add up how much we're actually making off of it. Plus, whenever you add on, the interest rate climbing, that also adds into effect of how much we're actually gaining. But we don't hold on to every single loan, and that brings us on to the sale of loans, where we actually sell it to other financial institutions that might be looking for more of a fixed income type of investment. Now, this is super cool because it just shows overall growth in our business. The fact that we can have, sale of loans be still super high, yet also the amount of interest earned is also climbing as well, drastically. So this is just showing, year over year growths that are actually staying, very, very static and going to keep that way. Obviously, we knew that was going to happen because of the bank charter, but still, it's great to know that it's actually starting to funnel in, and the things that we said were going to happen are happening. Another great statistic here is the average loan balance for our personal loans, which are also growing in the past year or so every single quarter. So this is super, super exciting. The more money that we have on the loans, yes, it does increase the risk, but it also increases the output of how much, interest they're paying, because, well, they pay on the amount of the principal balance, and then we get to keep whatever the interest rate is, left over. The next part, however, is the coolest part in my opinion, and this is potential interest. This is showing the overall health of the actual balance sheet whenever it comes to the personal loan business. Okay, you're taking the average amount of interest rate paid and then putting it to the average amount of, loan balance and taking out those sale of loans. This is not actually how much we're earning. The actual interest rate recognized is, however, this would be if we didn't actually sell off our loans. So I just wanted to actually bring it over to a big graph here where you can actually see what this looks like over, the last 2 years. And it's so, so exciting in the past 2 years, how much this business has grown on the personal loan side. And this is just one business area for us. However, potentially one of our best performing out of any other segment in the entire company. The only part of this chart that I would love to change is the cost of loans, okay? The cost has changed dramatically ever since we went from, 1% interest in our SoFi money up to 2%. For example, that's changed. And then the amount that it actually costs us to go into our warehouse facilities has also changed. But getting that information in one neat amount of numbers is like very, very hard. They spread it out like crazy. It's so hard to actually get a general number so then we can try to see how much these personal loans are actually costing us. If any of you guys know how to get that information or know how to source it, I would love to know in the comments down below. But just before we go on to the next part, I really do just want to stop at this 11.6% interest rate, okay? To actually talk about how excited I am about this interest rate, it's unbelievable, okay? Knowing that the actual cost of loans is somewhere between 2 to 2.8%, and the amount that we're actually getting out of these personal loans is 11.6%, that is mind-blowing, especially whenever you know that the FICO scores quarter over quarter is actually still continuing to grow. That is so incredibly hard, especially at our credit score and how fast we're growing. The more people that we actually reach out to, the closer that our FICO scores are going to get to an average, right? To the average amount, nationally. But considering that we're actually climbing it up, just goes to a testament to the people that we're actually starting to attract here at SoFi, and that's probably what Anthony Noto says due to the actual interest rates that we're offering in SoFi Money. The people who are actually interested in that type of interest rate or care about the dollars and cents that they make in their bank accounts are probably the other people who still care about actually paying off their loans and not affecting their credit scores. Okay, so going on and actually looking at the financial services segment of things, what we can see here is this is the referral side, okay? This is the actual strategic partners that they make with other businesses and actually get referral costs from feeding people to other types of businesses, okay? This got an explosion in revenue in this quarter, okay? So that's very, very exciting. What was also, very expected is the brokerage fees. This is how much we get for our payment for order flow and these sorts of things. That had decreased quarter over quarter. That's super to be expected because, well, we're going into a recession, right? So we can't expect, super high fees when people aren't actually buying and selling stocks. Like that's directly affected by how much people are trading. But the third segment here on payment networks, this one really surprised me, okay? As you could see, quarter over quarter, what we're seeing is a big decrease, even though this should be much higher because whenever we look at Galileo, the amount of people that are actually using their payment networks has skyrocketed. So I don't understand how, SoFi has decreased so much whenever it comes to interchange fees. It could even be a difference in the amount of revenue that we get from a split from MasterCard. I'm not exactly sure how it works, but it is definitely something to keep an eye on because it's a big revenue maker for us. And, how many more people that that we have on SoFi Money to actually how little we're actually making from payment networks, it should still be climbing, and yet it's almost cut in half. It's actually quite surprising. Enterprise services, for the most part, this is really SoFi at work. Okay, so this is, climbing, super, super understandable. It's an amazing business. Back here in Q2, this was something very, very specific. We did an amazing program, big service for another, enterprise. We offered some IPO services for them. We gave that to them. That was a one-time fee. It probably won't happen again, or at least for the foreseeable future. Overall, it was an okay quarter for financial services. What we were able to see was a lot of cross-selling into things like our personal loan segment, where you can see how those FICO scores were directly impacted by people that came from SoFi Money. But going on to our technology platform now, what you can see is this bar right here. This is the first one that I originally look at, and that's Technesis, okay? We don't have software licenses with Galileo, so this number is directly affected by Technesis. Very, very exciting, as well as things like our technology services. The big bump really is from Technesis, so that's very exciting. However, we did still grow overall. A lot of this has to do with just more members as well. So all in all, just another great quarter from SoFi. I hope to continue to hold and push out more quarters like this. Anthony Noto really does have this under control, and he seems to still want, to continue to climb, continue to grow, and that's the type of founder that I want to be behind. However, there's still more, as there's two different products that SoFi has been talking about that so far, from what I've seen, has been swept under the rug. If you've been keeping any sort of attention, you know that products like options are coming, which is going to be very, very exciting. Those are really high margin financial services products that can really take us to profitability whenever it comes to that sort of segment. That comes in the next 3 to 4 months. They said at least before end of year. So that's very exciting, but there's even more that comes to SoFi, at least what Anthony Noto has been hinting. For example, I've been getting word that a handful of SoFi clients have been getting surveys sent to them on behalf of SoFi in relations to SoFi travel service products. Things like asking clients if they would be interested in 25% higher rewards whenever it came to purchases that are made through travel products, or even rate matching to other different services that could be offered. There's also been things such as different references to $100 Airbnb credit, $50 DoorDash credit, and 24-hour customer service concierge and travel insurance. And as I was doing my research on this, I came across someone called Razwana Bajir. which, if you don't know, she's one of the people on the board of directors for SoFi. She also happens to be the CEO of a company called Peak, which is an online booking software for large travel businesses. And now all of a sudden, SoFi may want to get into the travel space, maybe because, she told them about the margins and things like this, which might also intrigue someone like Anthony Noto to get into the space, especially if we already have the clientele to do so. And the next product could be a big one for SoFi, and that's business accounts, which was started during a Twitter exchange with the users of Anthony Noto and Investor Gadget. Investor Gadget was reaching out to SoFi saying, when are you guys going to open up a business account? Because obviously I'm being underserved at legacy banks. And Anthony Noto replied with, talk to me. Where do they fall short? How can we actually make this a proper business? Which is the exact sort of leadership that I want from Anthony Noto, is being a curious person to see if maybe if SoFi can actually fit in and help this. Investor Gadget goes on to say that simple things like user interface and the amount of interest earned is just not offered at the legacy banks that he's currently banking with. Then he goes on to say some very particular things that even caught my attention, where he talks about things like offering credit cards to certain businesses. Now that we actually have that space up and running, it could be something that we could grow into as well, considering that there's way higher amounts of, payment networks for large businesses. Being able to offer other products and things like such as payroll for small to medium-sized businesses could also lead to another attraction for business accounts within SoFi. But last but not least, and this is the most important part I thought, was commercial lending, right? Offering small to medium-sized businesses large loans the same way that we offer jumbo loans through home loans or something along these lines is another way that we could also offer into, a new type of category or a new type of, clientele, which could be businesses. All of these points and more were all said very well by my friend here, Investor Gadget, and one that Anthony Noto took very well to. Anthony Noto said that he loved the feedback and that he read through it all, and that's very, very exciting because although this might not still come out for another 12 to 24 months or come out even at all, it's still good to know that he's thinking about it and actually taking word of the clients that are already in SoFi Technologies. Very exciting stuff, and I know that SoFi will be able to dominate the commercial banking space because I already think that they have a competitive advantage in all the other businesses that they have right now. If you want to hear my opinion on that, you can check that out right there, but make sure you guys like the video and subscribe down below if you want to see more financial content just like this.